So taking a look here at the major averages here out of the gate. Sorry, I was trying to calibrate some charts over here for our viewers. There we go. All right, Dow Jones Industrial Average, you're seeing that higher, actually, fractionally by about 0.1% this morning. The NASDAQ Composite, you're seeing that up by about 0.2%. S&P 500 also holding on to some slight gains. And this comes after in the futures, as we had mentioned, things were pointing a little negative, flat, just barely to the downside early this morning. But as of right now, opening cross, looking good for the major averages here in the U.S. Let's take a look at some sectors as well. And I'll come back to this apparel screen in a hot second here. But taking a look at the sector performance that we've been tracking here on the day. There we go. 11 S&P 500 sectors, folks, and you've got it relatively mixed, about as split as it gets for an 11 S&P 500 sector base. But anyway, taking a look at energy, that's leading the charge here on the day. That's up by about 0.7%. And then bringing up the caboose, you've got utilities. It's down by about 0.5% as of right now. So relatively split. Overall, though, just flat, barely to the upside for the S&P 500. Let's take a brief look at the NASDAQ Composite tech-heavy average, and we'll put this on an equal weight for you just to take a quick look. And also relatively split for the NASDAQ 100 names. And then just lastly here, you had some interesting calls come out on retail names earlier this morning. Both Tapestry, Skechers going to be in focus. Tapestry, that got a downgrade from Barclays to equal weight from overweight. And then Skechers as well. That actually was upgraded to outperform from market perform. So we'll keep a close eye on those shares. But here's a broad look at retail on the day.
You know, it was really interesting as you were looking at that sector full screen. It looked like some of the interest rate sensitive defensive groups were doing worse, real estate and utilities. Indeed, we see the 10-year yield perking up a little bit today. I'm seeing it around 3.54%. Yeah. But it's not hurting technology as it has been recently, right? So that's quite interesting as well. It's hurting more of the traditional interest rate sensitive groups and not the newer interest rate sensitive groups. So that's something to continue to watch here.